Good morning, Paul. Georgie from Allendale. It's September 18th, Tuesday morning, and more of the same in the soybean complex. Futures down sharply here as we speak, anywhere from 25 to 30 cents lower. And the main reason for this selling is it's got to be attributed to technical selling. The market took out some key chart support yesterday, closed limit down in the nearby soybean contracts, and then overnight, we took out the 50-day moving average in the November contract, causing some more stops to be activated. And it looks like we may have a few more days of this type of pressure, unless we can find some strength in here and some reasons for the market to turn higher. The news, a major part of this fuel for the bearish fire right now is the weather in Brazil. Southern half of Brazil and northern Argentina got some rain here last night and today. There is more rain forecasted for the northern portions of Brazil, which is going to help this early seeding of soybeans and early planting of corn. So that is weighing on the market. Also, what we find here in the U.S., basis continues to slip a little bit in the beans and in the corn. Harvest is definitely underway. The USDA said yesterday we've got 15% of the corn, or 26% of the corn harvest versus 15% last week, 10% of the beans harvested versus 4% last week. And talking to producers and getting yield numbers back from producers that we talked to, yields are surprisingly good in many cases and much better than expected. So that kind of headlines and news information is getting and causing pressure to the grain complex here today, and looks like we'll continue with that until we can find some positive news to change this direction. The conditions report yesterday, soybeans and corn both improved, basically on a counter-seasonal level, with the corn harvesting over 25% complete. It's given an indication that the latter part of the corn harvest could be much better than the first part. In the livestock trade, we've got feeder cattle higher, cash cattle or live cattle futures slightly higher and hogs lower here this morning. The cattle trade continues to be supported by tighter supplies of market-ready cattle. Fed our box beef increased values on Monday, and should continue to support the live cattle market there, and potentially see steady to firm cash cattle prices this week. Futures have got bombarded with a lot of liquidation yesterday, much of that coming from carryover selling in the grain complex, with the attitude that the Fed made a move last week with QE3. Now the reality came to traders' minds that, well, if the Fed makes this decision to add money to the system, maybe the system isn't quite as good as it was earlier thought. So that kind of attitude weighed on the market, on all markets yesterday, especially the beef and pork complex. Pork also is being weighed by the large number of hogs that are going to slaughter. Producers continue to market hogs, and they see out in front of them that if you do any calculations, by the time we get to late November, December time frame, hogs right now are penciling in anywhere from $50 to $60 a head loss. That's not a very exciting future, and that's causing some liquidation, putting more pressure on the meat market and on the live hog cash market. Also, the weather has cooled off, rate of gains are better, and continuing to cause some difficulty in trying to find a reason for this hog market to find a bottom. So a lot of things going on in the markets. Also want to remind everybody we got the monthly August Allendale Ag Leaders webinar on the 28th, next Tuesday, or week from coming Tuesday, and a lot of opportunity there to get signed up. If you got any questions, give us a call at 800-262-7538. We wish everybody a very successful trading day, and we'll talk to you tomorrow morning. Thank you.